Hello, everybody. Welcome to my regular look at the gold and silver price action and where it could be heading to next. Now, I'm going to probably do this gold silver analysis bi-weekly. I think that fits better into the sort of time horizons perspectives that we're looking at in this short look at those prices. Now, as you can guess from the rest of the news, that the gold and silver prices impacted quite heavily by the weekend's activities out there in the Middle East. Gold, silver often seen as a safe haven when things turn nasty. Have been seeing the price coming off due to the stronger dollar and high levels of bond selling out there. So what's been going on in the picture this morning? Let's take a look. What have we got? We've got a 15-minute chart here of gold, and you can see that spike on the open up from 1840s mid there to at one point as high as 1869, and then for the rest of the morning over here in the UK it's gone pretty flat, and I'm guessing that's a similar picture in the silver price as well. Maybe not as dramatic up there from 21.77 up to about, well, actually it peaked early hours of the morning over here in the UK about 22.17, and since then it's been trailing its way down. Remember, silver bit more industrial as a metal, serving other purposes, so maybe not just as plain a play as a safe haven trade as the gold would be. Let's look at some more macro analysis, if we can call it that. Correlation between the two. If we go back to start of 2023 here, and you can see picking up, actually it's about 87%. So these two are very correlated. Like I keep saying, silver's like gold's grumpy little sister. It's going to go off on its own tangent when it wants to, but always comes back. And at the moment we've got about, like I said, 87%. So this is very highly correlated play. If you're looking at both those individually. And here we have the gold silver ratio, popular in those two markets as a bit of analysis. I've got some longer term look going back to the lows of early 2022. You can see it peaking and then rebounding. It's sort of like a mean reversion type trade, this one, and you can adjust it to different time frames to get these peaks and troughs as that price moves back towards its mean. In the shorter term, taking it from sort of the beginning of 2023, and we can see it bottoming in around about, call that $78-80. It's how many ounces of silver in terms of dollars you can buy for 1 ounce of gold. So it's 80 to 1. Had been pushing on up higher through to about $85-86, and that seems to be a bit of a peak there as well. And again, you could maybe take that in even further, create some sort of strategy around that. But the market likes to look at this ratio, especially also in combination with that relationship there, the correlation between the two. But nothing too exciting to take away from that. I think it's all about panic demand, safe haven off the basis of the weekend's event. So in terms of the gold chart, commitment of traders data, seasonality at the moment pretty flat, maybe just picking up a little bit into November, then moving further stronger into the new year. The large speculators following that gold price. Interesting to see what happens on Friday when those numbers come out from the CFTC. We can see that spike this morning and that sell-off we were talking about earlier. Interestingly, hitting into this range over here, which was 1820s, early 1820s. We can see it going up pulling back. It likes that number. It's a bit of a magnet. So is that support for a further move upwards, or are we going to break down towards this? We had this double bottom down here in the 1620 sort of region. But overall there, it's looking neutral to weak bearish despite today's spike in the price. And the silver chart, what's that showing on that same setup? Seasonality wise, down the bottom, it's flat. It's nothing too exciting, maybe less seasonal than gold, but it's still got that same shape into the new year. And again, the large speculators following that price down, maybe a bit more of a bumpy journey down. Again, the spike this morning. Again, neutral, weak, bearish overall. Let's focus in on the gold price action. We've got the weekly longer term view of price of gold. We've got this nice trend line going up here. It's the same takeaway really in the longer term. Really like that treble top going on in terms of the price action. What do I mean? Treble top 1, 2, 3. That's the key up number around about 2100. And in between, let's just draw on some Fibonacci lines to see any key longer term numbers at play there. Let's go from the start of that trend up to the highs. Let's drag it out a bit so we can see a bit more clearly. Just breaking down through that Fibonacci around at 1900. We've got a bit more volume at this level, so it could provide a bit of support to the price. But then we've got this nice big empty void of volume right the way down to the point of control, which is at 1300 on this chart. Got a bit of action above it, maybe a bit of support around that 1500 area, 38.2% Fibonacci line. You go across to that price action there before it moved on upwards. But it's all about, I think, in between this pattern, this price move, just holding above its longer term moving average there. But downside 1740, 1750, where that trend coincides. Maybe we see a bounce there and back up, or like I said, that split down. It could move quite quickly down to those low numbers. But the price supported at the moment by the action in the Middle East, holding around about this sort of 1850 sort of area. It looks quite a strong number. In terms of potential buy-ins, we've got a long setup at play. We've missed the aggressive opportunity that happened overnight, as we saw, but we still got more conservative upside in here around about 1865 to buy back in. If you don't believe that's going to happen, we're still going to see further weakness, then take a look under those 1830 numbers for a move down. Into the Renko charts, what have we got? Medium term price action. We got $6 block size. Point of control above, so we do have the potential to move on up to this sort of volume area, which is around $1970. We can see the recent sell-off breaking underneath all this price action, which was the Fibonacci key number, 61.8% at 1920. Again, volume there as well, so maybe that could provide some overhead resistance for a potential pullback or a key break on upwards to these higher numbers, looking to push towards those highs again around that 2100 area, which we saw was key in the other chart. But at the moment, the trend still down, stochastic up. So, it's sort of added back neutrality into the price action. Although the upside has been up, it just started to negate the downside trend from, like the 1860 to 1830 area. That's $100 from that peak there, so over $100 price action. So some good trading to be had still there. Gold not as volatile as it used to be, but I said still some action in there. Look at these sort of Fibonacci numbers as ladders to create support, resistance zones, targets, your stop loss sort of areas. Suggest like I said, upside in the medium term, $1,920. Downside look for the key 1825 sort of area break there. Focusing on shorter term Renko. Let's just drag that across for us. We've got, again, the point of control way up here at 1940. You can see the sell-off in a bit more detail now. Again, both signals negating each other, so neutral there. Price action has been creating this saucer type shape so far. Bottoming at 1820s. A little bit of a handle building there. Consolidation around this mid 1800s. Volume over here. Again, we can see the lack of volume there all the way up to that point of control 1940. At the moment, though, like I said, just to reiterate, I think it's going to pause and take stock of what is going on at the moment in the Middle East. See what's happening with that US dollar strength. Is it topping out? If that weakens off and the conflict still escalates, then we could be seeing that price back towards the 1940, 1950 area quite quickly. Into silver very quickly. Longer term look here as well. I think the trend's rather flat, as you can see by the 2 standard deviation regression band between 29.22 and where that point of control is down at 17.25. So those 2 points there. So a couple of dollars. Sorry, not a couple of dollars. We got about $12 to play with there in terms of price action. So some range trading opportunities available within those bands. Not a lot of volume though. From where we're at the moment, downwards to the point of control at 17. Well, I'll call it $17. Round it to 17. Mixed signals at the bottom again. Reiterating this sideways range of action, maybe a tightening of the prices. Looking forward to breakout either side. But remember, the fundamentals for silver is slightly different to that of gold. But we also saw that correlation, highly correlated, around 87%. Line breaks 4-2 setup. What have we got? We're looking for a down move here. Again, we've missed the fast entry, more aggressive entry. We've got a down entry around 21. Let's just say 21.72 for potential to get down to the lows there. 21 sort of area. If you're still bullish, have a look at sort of 22.18 to get back into the upside. Now into the Renko charts, longer term look. First of all, let's put that on there, 0.2 block size, so 20 cents on the block size. Point of control around $23.19 in there. We got some more volume up there around this Fibonacci at $25 and then $26.50. Those highs back in May time. In terms of indicators, again, mixed, so not helping us much there. Shorter term bullish, longer term more bearish. Been seeing this sell off, and then I think got treble bottom there in on the Renko, moving back up towards that 61.8 start of where all the volume is. 22 spot 42. Bit of volume building up there where we're at the moment, pulling in a base on the price, but we got, like I said, a lot of action around this sort of 22.5 to 23.5 zone. You're looking for upsides, just like I said, follow the Fibonacci ladder. 24, 25, 26.5 to the upside, downside in 19, late 19s, around about 20, and then we're talking early $18. And shorter term action, 7 cents a block size, point of control around 23.35. You can see when you're focusing more on the price action, the smaller block sizes, 21.5 zone seemed to be an important number. Price just pulling back there now. Maybe provide that support for that bounce up there. Like I said, things, these two, silver, gold, assessing what's going on first. So maybe it'll hover around here for a while before deciding to go back up towards those Fibonacci numbers, say like 22.5 to 23.5, where the volume kicks in down there and up to those highs of 24, just over. Downwise pull back to just under 21, and then 20, and then 19.5. But overall, like I said, I think both gold and silver just holding back now after the weekend's news and activities, factoring in the other variables like we talked about, bonds, stronger US dollar, and whether, it's still got that, safe haven look about it. We'll see what happens when the US opens later today. Might add a bit more impetus to either direction. So there you go. That's gold and silver. Watch for another session concluded. Hope you have enjoyed it. Give us a thumbs up if you've liked it. If you want to hang around about 4 o'clock UK time, we're going to look at US nat gas prices and again see where that might be heading next as well. If you haven't already, please do subscribe and hit the notification buttons to receive future content such as this and anything else that I throw out there on the channel for you to get your teeth stuck into. So thanks for watching. Good luck with the trading, and I hope to see you again soon.